Hi, my name is Andrew Pang. Welcome to another edition of CMS Forex News. Today is Thursday, July 17, 2008. Overnight, European equities rallied, a rarity in the last couple of weeks. Shares of banks were the main drivers after U.S. equities jumped yesterday and continued to do so today. The increase in risk appetite helped the euro-yen pair climb 300 pips from its low prior to yesterday's New York Open. In Switzerland, the ZEW measure of economic expectations fell to negative 76.9, worse than expected. With inflation higher and stocks suffering, there is increased pessimism. However, inflation is expected to cool later in the year, and stocks should rebound as well. In a release yesterday, retail sales were shown to have jumped 7.4% compared to a year ago, a sign that consumers are still spending. With stocks recovering in Europe overnight, the pound-franc pair, a favorite for carry trade in European markets, rose to 2.0450. The pound also climbed against the yen as a result of the change in investor sentiments. In the U.S., data on housing starts and building permits surprised on the upside. Starts grew 9.1% to an annual pace of 1.07 million units. Permits were up 11.6%, rising to an annual pace of 1.09 million. The data came mainly as a result of increase in condos and apartments in New York City, as a result of a change to construction codes. Excluding the Northeast region, starts, for instance, still fell 4%. The climate in the housing sector remains pressured by multiple factors, including a soft job market, an ongoing credit crunch, fading consumer confidence, rising oil prices, and a high inventory of unsold homes. These conditions have not changed, and so this number is most likely an aberration from the prevailing trend. The number of initial jobless claims this week was 366,000, 18,000 higher than last week, but lower than expected. Layoffs continued in the auto and transportation sectors, along with manufacturing. The manufacturing sector in the Philly Fed region contracted for the 8th straight month in July, while prices continued to surge. New orders edged up slightly, but the rest of the components worsened. The euro-dollar pair stuck to a range overnight, with the euro gaining until the morning session in New York. After the Philly Fed index was released, the dollar lost to the euro and the yen. Around noon Eastern, oil prices started to drop, and the dollar paired those earlier losses. After retesting resistance at 1.5890, the pair fell below 1.58. The dollar continued its rally against the yen as stocks were in the green for a second straight session. The pair is up 330 pips from yesterday's low. Investors were encouraged by better-than-expected earnings from JPMorgan Chase to start the trading session and by the fall in oil prices in the afternoon trading. The South African rand hit a new 7-week high against the dollar as risk appetite increased overnight, with stocks climbing around the world. The rand's interest rate of 12% makes it a destination for carry trade. $1 purchased 7.54 rands, down from 7.6220 to start the session. Tonight, Australia will post data on import prices. Overnight, Germany releases its PPI. The UK posts figures on government borrowing, and the Eurozone reviews its trade balance. Tomorrow, Canada finishes the week off with data on wholesale sales and its leading index. And that wraps it up for today in Forex News. Join us again tomorrow right here at cmsfx.com.